Okay, good evening everybody and welcome to the latest in our Ask the Expert panel. Tonight we are joined by Henry Hathaway and Jon Sharp from Silver Shemmings Ash, who will be speaking about contracts and insurance. And we've also a guest with us tonight, Jo Sould, who's the Director of Strategic Planning at Nordens Chartered Accountants, who's going to be talking to us about the financial aid available to businesses and answering your questions on that. As usual, if you could enter your questions or submit your questions via the Q&A panel, which is in your bottom toolbar. We will take questions at the end, but we're going to kick off first of all with a short update from each of our three presenters on the current state of play in the marketplace in light of recent easing of lockdown regulations and the gradual move back to work. So, Henry, could we kick off with you, please? Could you give us a roundup of construction as it stands today?
Yeah, hi, good evening, everybody. Thanks very much for joining. I expect now that most of the construction industry, certainly from the viewpoint of many clients and many people I've been discussing over the last number of, certainly 2 weeks, have now got into a state of play of where they are entering back into the work areas. The big key thing that I think that I could certainly assist or put forward this evening is that previously a lot of the conversations that we were having was in relation to whether it was a force majeure, it was a frustrating event. We've addressed those in different points. So even if we do succeed, say for example, that it is a force majeure or pandemic it does meet that criteria, and if that is an express position of the contract, express clause, because it cannot be implied, it's no particular meaning in English law. What are the effects now? So we are now in a position where the lockdown effectively for the construction, everybody is back to work. Now they are facing into a new area. Where I'm going with this is because if the particular projects were in a position of lockdown, that could considerably, arguably say, well, the force majeure, we're going to argue those points, etc. But now the works are actually being performed or capable of being performed, albeit with extra costs, extra time needing to be allocated to that. So we're now looking into disruptions of how the intention of the parties at the time of contract envisaged this, because they didn't have the foreseeable nature, which of course has to be a point taken forward. So it's unlikely that parties would actually now be able to say, well, the force majeure event is actually continuing. That's a problem now, because it's one of causation. And that's really, so even if you do successfully plead force majeure, and that's really dependent on distinct pleadings and proving that point, causation is always going to be an issue. What's more likely now at this stage is that there is going to be disruption to time and increased costs. How those time increased costs now, how they're dealt with under the specific natures of the contract. Now, for a lot of parties who have been tackling this point, there certainly has been numerous viewpoints put forward. How does the Coronavirus Act, the regulations, in fact, the regulations were updated. We've also got guidance from the state level, which invariably, when one looks at all of them together, they don't really align. And there is a systematic difficulty in actually how to approach and what the effects are. Those parties who have tried to suggest, well, is there a change in law or statutory requirements or, you know, all of those instances, they might really, really have an issue with that, because how does it change? Certainly the specific nature of coronavirus or any of those points coming in may not actually assist, especially when we look at the different 4 levels, I believe, of what the guidance actually construes. But invariably what we actually think is that as we are coming out and getting back into work environments, and it's no big surprise the type of supply chain issues or the different elements that's been put forward as being difficulties. The real issue now is, how is this all dealt with? with the cost increase, and certainly, and how those are going to actually be put forward. What we're actually seeing really is that parties who are not addressing this are really dealing with them in the same way they've generally dealt with a lot of final accounts. They feel that they will leave it till the very end, and one way or the other, it'll sort itself out at the final account stage, rather than being the prospective nature to say there's a very, very real issue here. What provisions under the contract, what provisions did the parties agree to, or what can there be put in place now? Invariably as well, this is going to affect, there's a lot of parties who are still tendering, and what type of steps that they put in place now, because these rules will be in place for the foreseeable future, and they will be enforced. So ultimately, we think that there is quite a problem. It's not been upfrontly dealt with as nature as we think it could be, both in current contracts as they're being performed, that were continuing at the time, and what they potentially would be dealing with in the future. So we do see those issues and how agreements would actually be performed. Okay, Julie.
That's great. Thank you, Henry, for that. That's really useful. Joe, can we hand to you to talk to us about the financial aid, please?
Yeah, thanks, Julie. So, as Julie mentioned, my name is Joe Saul. I'm a director at Nordens, and I head up our strategic advisory team, where our core purpose is to work with our clients on a very personal and intense basis to help them fast forward to their goals. So, I'm happy to be here today to discuss some of the initiatives that the government put in place. And obviously, as things start to progress, we're likely to see a reduction and cutback in these. So it's important everyone's assessing the impact of them now and how they're likely to develop in the future, and build it into your cash flow forecast, because right now, this is probably the most valuable tool in your box, and that applies whether you're running a business yourself or you're responsible for a segment of a business. I've heard people argue that forecasts are a bit of a waste of time because you're effectively guessing, and my argument back to that would be, well, without it, how can you even start to gauge what decisions you should be making? How can you quantify whether you even need funding, let alone to what level? So having the cash flow forecast allows you to make the best possible informed decisions you can right now. And in this climate, that's just priceless. So before I talk about the loan specifically, I'd just like to mention that the need for cash will generally fall into two categories. Firstly, preservation. So using it as a way of addressing your pinch points that you've uncovered by producing the cash flow forecast. And secondly, growth. So based on your goals, what areas of your business actually need investment, and how can you utilize the funding that's available to help you fast forward towards your goals? So you should be aligning your cash and your profit forecast with your overall goals to help you make those informed decisions. So to me, as well as a means of preservation, the loans that are available now can be used as a real opportunity to fast forward your business's growth. It is worth mentioning that neither points are unique to the current situation. Businesses should be making funding and finance assessments on a regular basis to ensure they stay one step ahead and can fast forward that growth as soon as possible. So it is also important you're not simply seeing the loans that have been made available as free money, so to speak. So I have to re-emphasize that, of course, it will need to be repaid, but I would say that it is an opportunity to help move the businesses forward quicker. So you need to look at your longer term goals to ensure that you consider all your finance options, and that may even mean looking at a higher level of finance, even if it comes with interest, if it will get you there quicker. So in a nutshell, the businesses with a good awareness of their current cash position, together with the clear long-term goal, will be best positioned to make the most of their finance, whether that's government-backed loans, as we're seeing at the moment, or a variety of other finance options that are available. So getting into the specifics, the government have announced two key finance initiatives, and they're called the CBILS and the bounce back loans. So firstly, the bounce back loans, they range from between 2,000 and 50,000, and the amount you're likely to get is based on your company turnover in the 2019 calendar year. You have to approach your own bank to get this. There were at one stage some other banks that were lending to non-customers, but generally now it is your own bank. No personal guarantees are actually required, and the government are backing 100% of the bank's lending. So in pretty simple terms, the banks are quite happily giving these away at the moment. The length of the loan is 6 years, although early repayment is allowed without charge. There are no fees or interest for the first 12 months, and there's also no repayment necessary for the first 12 months of the bounce back loan. Afterwards, the interest will be set at a set 2.5% per year, and just remember that the 50k for a bounce back loan is a cap. It's not that, oh, I'm going to take the 50,000 bounce back loan. It's based on your turnover, and that's the upper threshold. So moving on to the CBILS, there's two tranches, one for SMEs and one for larger companies. For the small and medium-sized businesses, loans range from 50,000 to up to 5 million. So it's a much larger lending pool, but the lenders have a lot more discretion here, and you have to jump through a few more hoops, so to speak. Again, you need to be approaching your own bank first, although there are lenders out there that are taking non-customer business, such as Funding Circle. So it is advisable to do this, but not as essential as the bounce back. No personal guarantees are required for this one either, up to 250,000. But after this, the security measures come down a bit more to the lender's discretion. The government are backing 80% of the bank's lending here, and the maximum length of the loan is 6 years. Early repayment, again, is allowed without charge, and there's no interest or fees for the first 12 months. After this, one of the key differences, the interest is set by the specific lender after the 12-month period. So it's not a flat 2.5% like the bounce back. The lenders have the capacity to set the interest rate that they feel is reasonable. So there will be variances depending who the lender is. And the administration process for the CBILS is much lengthier, and the rejection rates are significantly higher. There is also an upper tranche which is set out for larger companies, and lenders can provide up to £25 million worth of loans for businesses with turnover of 45 million up to 250 million, and they can lend up to 50 million for businesses where their turnover is above 250 million. Again, the same rules on PGs apply for 250k and below. There's no personal guarantees required at this stage, and the maximum length of the loan for the large companies is only 3 years. And again, early repayment is allowed without charge. So generally, the bounce back loans are much more easier to obtain and quicker to access than the CBILS, but they're capped at the 50k that we've mentioned. So you're not able to have a CBILS and a bounce back loan, but if you were accepted for a CBILS, you can convert that to a bounce back loan should you wish, as that was announced afterwards. So those businesses with capital requirements above 50k, they'd need to look at the CBILS or possibly combining a bounce back with some other commercial interest-bearing finance. So there are many lenders already accredited for both bounce back and CBILS, including all of the general high street banks, and more applications from other lenders are in progress. So you should need to check straight away to see if your current bank or lender is supporting it. And you can check on the business banking website to check to see, because they list out all the lenders that are currently accredited. But your bank should generally have a good gauge on that, and they'd be able to give you a time frame if they're not yet accredited, or if they're actually going to be accredited. Under both forms of funding, you're going to need to explain why your business has been impacted by the coronavirus. Although for the bounce back, that's just more of a tick box exercise as opposed to actually having to describe something. And at Nordens, we've created a care pack to help detail some other simple things you can do yourself together with all these areas of government support. So if anyone would like a copy of that or a link to that afterwards, just let us know. So that's some sort of background on the loan funding at the moment, but there are a couple of other things that are worth considering for businesses at the moment. So in our mind, one of the strongest areas of support you actually have in terms of preserving your cash is from HMRC. They're being very lenient with all forms of taxes during this time. So before making any payments across, it's important that you speak to your advisor to make sure that it's manageable, both for now, but also bearing in mind it's not going to create a huge hole that's going to hamper your future plans down the line. So like most things, balance is really key here. But what I'd recommend is the starting point for all businesses to make sure your books and records are up to date so you can actually see where you are, because leaving your accounts or your VAT returns or whatever to the deadline may seem like a strategic move at the time because they don't actually have to be done until that date, but you're kind of prolonging your uncertainty here. And we've mentioned about talking about HMRC's leniency in respect of payments, but there is a tax relief out there for businesses, and it can actually result in you getting cash back from them. And many businesses are actually quite unaware it exists. So if you haven't already, please look at R&D or research and development's tax credits, because they should be explored by every company, because it's a lot more wide ranging than people think. Just quickly touching on furlough, obviously the government announced yesterday that last week, that furlough would be extended until October with the same 80% structure up until July. And from August onwards, it's going to change, although the specifics are still yet to be announced. So again, our care pack has quite a lot of FAQs on furlough for anyone that's interested. With regards to the self-employed grants, the portal for this is now up and running and people are applying and receiving their grant money back. It's quite a simple process for those self-employed people out there. What you need to do is you need to go onto HMRC's website to firstly check your eligibility. And to do that, you'll just need your national insurance number and your unique taxpayer reference number. And once you're eligible and HMRC have confirmed that you will, they'll do that instantly once you set yourself up. You will be in receipt of a grant. And what that will be a taxable grant based on your average trading profit over the last 3 years of self-employment. If you've only been self-employed for 2 years, it will be an average of the 2. And if you're only been self-employed for a year, it will be that year. But bear in mind, 2019, 2020 tax year will not count towards this calculation. So it's only up to the 18-19 tax year that they'll base these grants on. The grant will be 80% of your average monthly profits, and it will be paid out in a single instalment, and it will cover 3 months, and it will be capped at 7,500. So it will be paid in one go. And once you're eligible, you just need to complete a little bit more information to actually make your claim. So again, you'll need your UTR number, your unique taxpayer reference that you'll be able to find on any tax document that you've got. You'll need your national insurance number. You'll need your government gateway user ID and password. And if you don't have one of these, you can create one when you're checking your eligibility. And you'll need your bank account number and your sort code that you want to pay, that you want the grant paid into. And you'll need a form of ID such as your passport or driving license handy. And once you've done all that, you'll need to tick a box to basically say that you've been adversely affected by coronavirus. And then you press submit. They'll tell you how much that you're getting back, and you'll be able to get that back in generally 6 working days. So if you haven't already and you are self-employed, make your claim because the portal is open. So really, as we enter a new normal, so to speak, a lot of the things that have worked before may no longer be viable in the same way. So I think it's important you're considering whether all aspects of your business are fully COVID prepared, and look at adapting your business model accordingly and perhaps pivoting to give you the best chance of future success. We do appreciate it is a bit of a minefield, so start small, targeting those areas that are of really high importance. They'll actually get you the best results quickest, and make the most of your support networks to help you along the way. So the crisis has brought many challenges, but there are still many opportunities out there, and I think it's important that your business is set up to make the most of these. So if anyone would like to talk about their business or specific situation separately, we're happy to offer a consultation to anyone listening on the call today. And that's pretty much it for now from me, Julie. So thanks for everyone for listening.
Okay, thanks for that, Joe. That was a great roundup, which leads us on to Mr. Sharp on the vagaries of insurance and COVID.
Thank you very much, Julie. As I'm sure most of you will have experienced, insurers' approach to COVID-19 has been less than helpful. Their approach is essentially that if it's to do with COVID-19, we really don't want to know. However, that position has changed really rather rapidly over the last 8 weeks. So, don't assume the insurance companies are going to come running to your aid at the moment, but equally don't panic if they say you are not covered, for example, for business interruption. But obviously, the first thing you've got to establish is whether or not you have got insurance coverage. So you need to check your policy wording, and in particular, whether you have notifiable disease cover, pandemic cover, etc. I can't tell you whether you have to read your policy wording, which is a lengthy document and requires a good hour in a quiet room, preferably with no light. But there you are, you'll find it, it'll be in there somewhere. Where will you find it? Well, as I said, read all your policy wordings for every policy you've got, but in particular, you might find it in business interruption clauses. If you are fortunate enough to take out cover for delay in receipt of essential supplies, look at that. Contractors all risk cover, there may be something in there depending on the level that you took out. And then your office exclusion cover. What's going to assist you is the government did at least say that COVID-19 is a notifiable disease, and therefore you may potentially have coverage depending on your policy wording. 2 points to make very clear though. If you are fortunate to have policies that cover provide some kind of cover for pandemics or notifiable diseases, then you've still got a duty to mitigate your loss. You must not just close your office door, walk away, say, I'm insured, I'm going to deal with it. Sorry, insurers will deal with it. That's not the situation. You must still continue to run your business in the best way you possibly can. So in terms of business interruption, you've got to try and do your best to minimize your business interruption. So I suppose the best example would be a pub. Can the pub do takeaways? Yes, it can. Well, you should be at least trying to do that. The other thing that I really want to stress is because there's been a number of cases that I'm dealing with recently where people aren't doing this. If you find you have got some form of business interruption cover and it contains the words notifiable disease, then make a claim. Your claim may well be rejected, but what you've got a duty to do is to notify insurers as soon as possible of a potential claim. So even if you think you've got one, make a claim. You may not know the amount of money you're claiming. That doesn't matter. Put them on notice that I'm going to be making a claim. Now, at the moment, insurers will undoubtedly reject that, to which you only need to say, thank you very much. I don't think you read the policy wording correctly. I'm taking legal advice, and I'll come back to you later. Now, the reason you can now say that with some comfort is that you do not need to go far to see the outrage that is directed against the insurance industry for them effectively wiping their hands of COVID-19. The anger, you can feel it on LinkedIn, is there. And the FCA, their regulator, has noticed this and is doing something about it. The FCA is not a regulator like the water regulator or the electricity regulator, who in the latter case does nothing about the fact that it's a cartel, and the water regulator saying, oh dear, you need to pay that man £250. The FCA has real teeth. I think its record fine was 39 billion against Barclays. So it can direct those it regulates and can impose heavy fines and in fact tell them what to do. Now the FCA, allegedly in June, but I doubt it, is taking 17 policy wordings to court to have them interpreted by the court, in particular, whether or not they should be paying out the COVID-19 related issues. That will undoubtedly cover business interruption, of which there's two main clauses. The first, you have to have notifiable disease on the premises, and the second, within a 25-mile radius. Now, there's already very learned counsel opinion saying that in relation to the 25-mile radius, you're onto a fairly good case there. But equally, I'm not as pessimistic as him. I think that if you will also succeed if you had it of the cover that said it has to be on your premises. I do not believe that the courts are going to hold that a virus decides to go into some premises and not to others. And I think, as counsel quite rightly said, I think I have his paragraph here. Accordingly, by the 23rd of March 2020, when the government lockdown was ordered, there are occurrences of a notifiable disease within a radius of 25 miles of, at the very least, many of the premises insured under this form of policy wording. He's specifically talking about the 25-mile radius one. After all, COVID-19 was a pandemic which was rampaging in most parts of the UK by that time. It is apparent that the figures for actual cases of COVID-19 from early March 2020, if not earlier, drastically understated the number of COVID-19 infections amongst the populace, but also because they were also not notified because there was an absence of an efficient and effective testing program. He goes on to say, and I think this is the point, nature does not work in watertight compartments, especially where notifiable diseases spread by viruses are concerned. So do not give up just because your insurers have said you're not covered. keep your records, certainly in relation to your business interruption losses. Keep them somewhere so that you'll be able to prove in due course. You will still have to prove your loss, but keep them so that you can prove your losses, because this is very much an ever-changing picture. The regulator's going to be doing the work for most of us, though I suspect that we will still have to join in. Lastly, the chairman of Lloyds has also said that he expects COVID-19 to be covered and that policies should be responding to it. Now, he can only say that. He hasn't really got that much clout to force people to do it. But there is a rising tide here whereby insurers are being said, basically people are saying, you have behaved unfairly, unreasonably, especially as, in particular, infectious disease and pandemic cover was an extra you had to buy on your standard insurance policy. It was not something that you just said to your broker, oh, get me the minimum cover. It wouldn't be included. You paid extra to get that cover, and it's right, especially after the Insurance Act of 2015, that insurers should be responding appropriately. So don't give up, make the claims, even if you can't specify how much you're claiming for, and keep your records so that even when the courts decide that you are covered, you can prove your loss to insurers. I think that about summarises it, Julie, just at the moment.
Okay, that's great, John. Thank you. That's really useful. We've had some questions coming in, guys. So what I'm going to do is throw the questions out. The first one, Henry, probably one for you. RICS has instructed surveyors not to down value due to the current situation. What do you guys think of this? Henry, you're on mute.
Yeah, thanks. I think that's the this kind of reflects. I understand the sentiment in relation that unreasonably or naturally low values, certainly in the current environment. And one, I suppose, can look to one of the parts of the guidance was actually taking a specific look at the parties being overly enthusiastic about contractual rights, given the nature. But that is the guidance. It's how the guidance is actually read in relation and where it stands with any statutory power or any contractual. And ultimately, these if they don't by statute actually change the elements of the contracts or how the contracts perform, those terms are capable of being performed. The larger question really is, how are they actually treated when it goes to a dispute? And we've seen different occasions of this. We've actually seen in terms of insolvency, we've seen in terms of where parties are using the equation of coronavirus to perhaps explain difficulties that they've always had. They would have been there in any event, and if something wasn't viable financially or something was really difficult, to use coronavirus as the occasion for the breach or the event is materially wrong in that sense as well. But if I think that certainly any of the agreements that I've been drafting with clients in this environment to create certainty over the path towards the end or discharge of the contract has always taken that reasonable sort of sense in relation to that. But ultimately, the rules of contract will be, they are capable of being performed. So when read against the guidance, which did remark, and I think that point would take very much in line with what the guidance did say, it's the force of that. And there is a very big difference between advisory rather than contractual. So we're into, there is an abundance of case law, and certainly if we just look at clause 1.3 of the JCT, it's the conditions as it stands. That's really where it runs. I think the key word about it is reasonableness, and I think it's important for both parties anyway, all parties involved, that there is a sustained route to arrive to the discharge by performance of the contracts anyway.
Okay, thank you for that, Henry. Joe, this is definitely one for you. For the bounce back loans, can you claim from more than one bank? A business has accounts with, if a business has accounts with more than one bank, as long as it is within the capped rate.
So I'm assuming this means sort of in the context of you have one business and you're trying to get
multiple bank accounts. Yeah.
Yeah, I don't believe you'll be able to, because generally if you've got different banks, they will probably take that into account. I don't believe you'd be able to. So yeah, I think that would be quite difficult. If you've got two different banks with two different bank accounts with one business for one company, they'd probably look to see if you've already had that. I can't comprehensively say that we've checked that with every single bank that we work with, but I think it would be quite unlikely.
Okay, that's great. Thank you for that, Joe. John, there's one here that, or Henry, either of it, probably John. I work on a government project and the directive we have is COVID-19 is not a force majeure or change of law. Do you think we will have a challenge from the contractors regarding this government position?
Henry.
Yep. Okay. Right. So this is again coming down. We've got to understand that, you know, when parties go into dispute in England and Wales, it's very much an adversarial position, and the burdens and you can often see the contracts are competing interests as well. So we have an employer's position here, which obviously is, you know, not going to be particularly the same as the contractor's viewpoint, which is to say the contractor is obviously going to be leaning on towards, well, it is a force majeure. And remember as well that if a force majeure is not an express term of the contract, it can't be implied. It doesn't have a natural meaning under the English law. It's not going to be implied. So for all the use of words like force majeure, that's all the way true. Force majeure is not a term that's used in NEC. It's a term that is used in two particular parts of the JCT, in suspension for 2 months and for relevant events. It's not used anywhere. So it's not the case that it is going to apply in every instance. The change in the law, that's the difficulty as well, because what change in the law has occurred? You know, one might say, well, there's a Coronavirus Act and it's been, you know, in 2020. But, you know, reading together and, you know, in terms of Coronavirus Act, the regulations that's been updated twice, we've got 4 levels of guidance that don't appear to be aligned. And the natural question really comes down to the point that if somebody is relying on a change in law, what law? And what particular instance is the natural question to reflect and ask back? Now, where they're going with that is a change in the law after the base date in the JCT. That's the critical X2.1 of the NEC. And I think you have more chance of that argument, NEC, the wording. But inherently, you would have to identify what is the actual change in law. Remembering as well, a lot of construction projects actually did manage to continue throughout. And therefore, it's the exit outwards as well, that if there are restrictions, you know, in terms of how parties are to go to work, social distancing, inherently, is that a risk of contracts? Just because something becomes more difficult or more complex or those different points does not automatically mean that there's a right for a contractor. It doesn't simply mean that. Complexity is not a root of a relevant event or a relevant matter. You know, and we see an awful lot of arguments in terms of, say, like, no, well, does it fall under the 1974 Health and Safety at Work Act, or even like, no, does it fall under the cost regulations? Lives in those terms, and who owns that risk in terms of that? And it doesn't always necessarily fall on the employer. Like the words of the contract are incredibly important here. And there's not, in this is one particular case, it is not a one-stop shop for everything. Not at all. And it's very, very specific.
Okay.
Julie, can I just add something to that?
Absolutely.
Just looking forward in terms of force majeure contracts, I've just been looking at giving a talk recently on a shipbuilding contract. Now in there, force majeure is very clearly defined. I'll just read it. It doesn't take a lot. If you just listen, how useful would this definition have been in current times? Acts of God, acts of princes and rulers, requirements of government authorities, war or warlike condition, civil commotional riots, mobilization, sabotage, strike or lockout, quarantines, flood, typhoons, hurricanes, storms or other extraordinary weather conditions not included in normal planning, earthquakes, tidal waves, landslide, fires, explosions, collisions, strandings, import or export bans or restrictions. I do think that looking forward, when people are going back to normal contractual relations, don't forget this time. Look at your force majeure clause and define it properly. I don't know whether you'd agree, Henry.
Yeah, I did, John, absolutely. And I think that anybody going into any contract now, like in consideration that if everybody, and you know, I'm in no way standing to comment or give anything on points of views of second or third wave. But if one is to believe that, like, you know, that these things do come in second or third waves, and if they do occur, you know, this is the time that parties really need to be thinking about this. And if they are getting into contracts, there is a foreseeability is a massive issue in respect of force majeure anyway. If we have a force majeure as an express term, of course, I keep repeating, come back to that point. But what really parties really need to understand is, like, even if you get past the point of a definition of the pandemic or case law, there was certainly a lot of case law relating back to 1915 and even 2010 relating to the definitions of whether it carries or not. But even if you do manage to attract and bite into that term, what many parties are not really considering is the causation element thereafter, which must be distinctly proved. That is the key issue. But the foreseeability issue, that if we are going into contracts now, we are continuing to operate, we really need to have that real sense of foreseeability. And that is in all of our activities, is that we understand that this is perhaps something we're hearing that we may have to live with this. We may have to, you know, incorporate into our daily lives. That means that we have to incorporate into our contractual points as well. And the foreseeability, because whatever chances there are now of attracting liability under these, there will be very little sympathy if we don't take heed of the foreseeability issue now going forward.
Okay, point taken, gentlemen. Thank you. Joe, someone's emailed it or chatted, putting a question here to say the Bank of England is talking about a negative interest rate. How is this going to reflect on what is applied to the loans being provided by the government under this current scenario? That is, if it's implemented.
Well, the interest-free periods apply for the first 12 months under both scenarios anyway, but I think it's a case of they've announced a flat 2.5% on the bounce-back loans after the 12-month period, but that's obviously subject to change depending on what they do with the interest rates between now and 12 months' time. And also with the CBILS, there's no sort of formal standard of interest rates that are going to be charged, so it will really be up to the lender and dependent on the lender. But I'd imagine if they make any key changes to interest rates like this, the lenders will reciprocate accordingly. But there's no sort of formal guidance on that at this time, but I'd imagine that they will do something should that happen and drop the interest rates accordingly with the loans.
Right, so look out for updates on that. Okay, another question, John. Have we got requirements under the contract to provide insurances to cover for pandemics? So is there a requirement under contract?
That's a nice question. The short answer is you'll be very lucky now. If you did not renew your insurance policy before mid-January of this year, for this current year, it will be virtually impossible for you to get cover now for any sort of infectious disease, pandemic, contagion in any policy. The market knows, the insurance market knows that it is facing potentially horrendous losses. And it's extremely unlikely that they will offer this type of policy again. Or if they do, it will cost you an absolute fortune. And I think, and Henry will correct me, in the JCT contracts, it says you basically have got to get the best insurance cover you can get. I just do not think that you will find any cover anywhere now for infectious diseases, pandemic, and certainly not COVID-19. So I can't see how an obligation can be placed on. I do think in a couple of JCT contracts, it says you must get effectively the best insurance you can get if it is commercially available. Well, pandemic cover, I don't think it's going to be commercially available, as in you'll be able to afford it for some considerable period of time, if at all.
Okay.
Yeah, there's a lot of very interesting arguments coming out as well, because like, you know, where we have in the 1974 Act, where employers have a duty of care to provide a safe working environment for their employees. And of course, the term and the scenario gets put around quite often to suggest, well, if they haven't maintained what they ought to do, and there are quite heavily sanctions by the HSE in that respect. But if they've breached that, but then again, we're back into the point of view of causation. You know, there's a long incubation, you're trying to point the viewpoint of the exact timing and all of those events. But we were getting into a very peculiar scenario with insurances in any event, regardless under Section 6, because we're looking at even professional indemnity, which is taking an awful hammering in any event, in respect of where architects are trying to provide PI at reasonable commercial levels. Ultimately, we're now getting to the stage where they are just excluded from any liability, and parties are entirely the only limitation on liability that you can't exclude under contract is that fraudulent misrep, or negligent misrep, and any negligent, you can exclude it. And we've seen architects certainly doing that, and I'm not to diverge, but what I'm suggesting is that the events, if we don't think about this very, very carefully in the future, we're going to constrain the whole industry to points of view where nothing can get done or any type of coverage, and it just all becomes excluded. And that just destroys the whole purpose of what's actually trying to be achieved in those events.
Okay, we've also got someone saying here, the directive to practice social distance has resulted in closure of sites, which, as far as they are concerned, is an implied term to say close.
Yeah, the social distancing, when, you know, in general terms at this moment in time, social distancing, and I'm coming back to the point of where, if we were to look at what was lockdown, well, were construction activities actually brought into those essential, that essential list, does there express reference made in either the Act or any regulations or the guidance to be read as a whole? Remember, they're not very well aligned as they currently stand. But even if we do depart from that point, we're now talking about the current instance now at this stage in time. You know, if it's an implied term, you know, implication will mean that it's from some statutory point of view. That doesn't necessarily mean that there's been a change in the law or that there is not those type of instances. And it doesn't actually say that the risk has materially changed from one party to another, unless the actual mechanisms actually provide for that. And if, you know, ultimately, we're back to the same point again, is where does the liability actually rest? Now, in a lot of, and having dealt with numerous, in terms of drafting amendments, for quite numerous events or projects, and the differences can be very, very express. But these, you know, in one instance, just because a certain type of brick or something is in any other events is no longer available for whatever event, doesn't absolve the contractor from contractual duties. So external events, no matter how harsh they are, doesn't always relieve a contracting party from these events. It really, really depends. And I think that I don't really regard, I think that contractors need to be a little bit more careful in how they are actually recording and how they are providing for. I've started off this conversation by suggesting leaving it to the end, to a final account, at the end, having suffered all of the loss, delays, and the threat of liquidated damages. It is highly, highly a very dangerous tactic to leave it all to the very end now and expect that because there were such events that automatically it's a matter of right that they would be protected. I simply don't see that it may be the case depending on certain wording, won't always be the case.
Julie, can I just ask Joe one question, because I think it might be of interest. Joe, how would let's just assume I'm right, okay? A dangerous assumption I accept entirely, but let's just assume I'm right, and that in 2 months' time, 3 months' time, insurers start to pay out on business interruption claims. How are businesses supposed to deal with that potential recovery in their balance sheets? I wouldn't know what to do with it.
The compensation payout, you mean?
Yeah.
Yeah, I mean, so that would generally go into their accounts in their profit and loss account as a either non-taxable or taxable income, dependent on the definition of the claim.
Right. Okay.
That help?
Yeah, it did. It was more, Joe, that you can't build in a potential recovery into you can't do that.
Well, it depends, because for things that are contingent assets or contingent liabilities.
Yeah, that's what I'm talking about.
If it's a contingent asset, it has to be what's deemed virtually certain to be paid out for you to actually account for it in your accounts at that point in time. So generally, right now, you're probably looking at disclosure as a maximum, just to say there's an ongoing claim, and until it's virtually certain, you can't account for it.
Thanks, Joe.
No problems.
That was useful. Thank you, guys. Just a couple of more questions we've got here, including one from John. Oh, sorry, one here saying, if a contractor insists on a COVID-19 clause being inserted in a contract which recognises COVID-19 as a force majeure event, is this binding, and will this automatically entitle contractors to an EOT, extension of time?
Actually, it's more Henry than me, but I think well, Henry, you're better dealing with this than I am. You're the contractual god, after all.
Yeah, I think in terms of the extension of time, you'll find that if we're talking about the JCT, for example, you'll find the extension of time in direct relation of Section 2. Again, we're back to the point of saying that if we do follow a route of suggesting that a pandemic is a force majeure, if we are successful in that, and there is case law that would certainly assist on that point, or there was an old case in terms of the plagues as well, but ultimately that does not necessarily give the opportunity to recover costs under JCT. We all really do need to remember that as well. So a relevant event would provide you for relief against liquidated damages, or provide an adjusted completion date if we're successful in that. And again, I go back to the point of view that we're into the argument of causation as well. We really do have to attach ourselves to that point. Secondly, though, what do we do about cost and all of that? Well, it does not necessarily give you the opportunity directly. There's no mechanism under relevant matter to instinctively provide. There's nothing expressed there to give extra costs because of the force majeure. So then a party really needs to be thinking about, is there any other mechanisms under the contract now to actually give that opportunity to recover costs? Are they going to plead, for example, that it's a variation, or that it can fall under clause 5.1.1 and 5.1.2?
I suppose what Henry's absolutely right, but my point was at the moment it's silent as to most JCT contracts are very silent as to what can be regarded as a force majeure event, which means...
Yeah, JCTs don't define what a force majeure.
Exactly. So I'm just saying, if you put some definition in it, you've got a better chance than at the moment where it's not defined at all.
Yeah, and I think that's going to be expected as well, as to whether you take the generic definitions or wild capturing, and then of course that becomes a matter of interpretation, which of course has been subject to a lot of disputes in the past, that you exclude one or you list out numbers, but you don't. But generally the case law will support if there is a definition of such.
Yeah.
But again, of course, it comes back to the root issue that have been dealing with for quite a while. Force majeure is not a defined term in English law. It is it needs express detailing. If that's a listed item or unlisted items, how they are treated and dealt with become incredibly very important.
So I look forward to seeing the acts of prince and princesses in JCT contracts going forward, Henry.
Yeah, the acts of prince, yeah, that's right, yeah. That's the one, yeah.
Okay, one here we've got is, how do you see the PPN supply relief being implemented for local authority clients in terms of risk?
Sorry, Julie, what's the question again? I'm trying to find out the list.
It was the first one that came in. How do you see the PPN supplier relief being implemented for LA clients in terms of risk? So I'm assuming that's local authority clients in terms of risk.
It depends on what you mean by the risk. I think whether or not we've actually covered that, I'd need further points, because we've actually, it's the same functions really.
Okay. And on the earlier point, John, where you were speaking to Joe about how that insurance money, should the payout come through, how that should be dealt with, we've had a further question there, is would you expect all contractors to declare that? Question mark.
I think, can you put Joe back on? Because then...
Yeah.
Right. Joe, I think we've confused everyone with our last conversation, sorry.
Yeah.
What I was trying to get at was, say you have, as you rightly said, a potential insurance claim for, yeah, I don't know, $1 million. Yeah. When would you, I think my question was, when would realistically you be able to put that in your books?
Yeah.
I think your answer was, you can't until it's pretty much, I was going to say erasing certainty, but that's probably not a good one either.
Yeah, my original answer was once the claim's actually gone through and been paid out, about where you'd account it for, and that would obviously go into the company's accounts in the profit and loss as income. But yeah, like you said about when the claim is still in process, it would need to be virtually certain to be accounted for as an asset on the company books, so to speak. That's generally the rules around contingent assets. You may need to make a disclosure, but again, it would be gauged on the element of certainty of payout at the time.
I suppose what some businesses might be concerned about is saying, look, I've got this potential claim here, I may well get it.
Yeah.
But that you can't really use that, not as leverage to the banks, but as something, I suppose it's worth a mention, as opposed to be something that you could actually include in the books. Yeah,
that's right. Yeah, it's probably a kind of off the book disclosure, or even on the book disclosure. You could probably disclose it in word sense, but actually account for it and provide for it, unless you can prove that it's virtually certain under the normal accounting standards. It would be very difficult to justify that until it is at that point.
Thanks, Joe.
Okay, gentlemen, well, we've come to the end of our questions. I'd like to thank firstly Joe from Nordens Chartered Accountants for joining us and giving us his viewpoints on finance. And thanks, as always, to the dream team of Henry and John, covering contracts and insurance in their own inimitable style. Thank you all for joining us. Thank you for your interesting questions. As I say, this recording of this will be available tomorrow from our YouTube channel and the website. Up till then, hopefully we'll see you again next month for a repeat with updates. So we will see you all again soon. Thank you all for joining us and stay safe.
Thank you.
Yep. Thank you very much.
Good night, ladies.